In this video, I'm going to talk about an element of the CPI that I think is going to start pushing up in the coming months and probably will be persistent for the next few years. And this will help keep the CPI elevated above its normal inflation rate as time goes on. Now, for any person who has been watching my vids, it's no secret that I have been very critical of the Federal Reserve and the Biden administration's explanations for arguing that the CPI would be transitory. I am definitely a person in the camp that this is not transitory. This is going to be persistent rising price inflation. Maybe not as bad as the 1970s, but certainly worse than what we've experienced in the last 30 years, okay? And so one of the points that I'm going to make tonight that kind of, I think, bolsters my argument is the shelter prices component of the CPI. So shelter prices of the CPI comprises 33%. It's weighted at 33% of the consumer price index. So our officials have basically estimated that when we spend money on our goods and services, about 1/3 of it goes to shelter. Now, most of this is divided up into rental prices, rental inflation, and what they call owner's equivalent rents. Now, owner's equivalent rent has been a controversial thing among economists from every branch. Most argue for it, some argue against it because they say that using owner's equivalent rent instead of using housing prices inflation, which is what was used before 1982, has sort of masked or hidden away the CPI, okay? So it's kind of understating the CPI. So owner's equivalent rent is where there's a survey that's sent out to homeowners, and they ask them, and they say, if you were to rent out your home, what would you charge? And then they gauge that change instead of just taking housing pricing data. So this is what I'm showing you right now is in the blue right here. This blue line is the percentage change year over year of housing pricing data comprised from the Case-Shiller U.S. National Home Index under the Standards & Poor's indices, okay? So this is sort of a private, survey gauge of changes in home price and changes in home valuations from year to year. The green is your consumer price index, the shelter component of it. So it comprises of owner's equivalent rent and then your rent prices and then a couple of other factors that make up 1/3 of the CPI. And you can see the dichotomy here. You can see how there's this huge change in home prices, but there's not that much of a change in the shelter component year to year. And I'm not really going to go into why there's a change or why not, or if the government is hiding data or missing data, because this trend has always been this way, and to me it's irrelevant. What I'm going to point out to you is the effect that a rising home price has on that consumer price index component, and there is an effect on it. So when home price inflation goes up, it does end up pushing that consumer price inflation. And I guess you can see where I'm going with this. I'm going to go up to what are the home price inflation today and how much is that going to push up the shelter component of the CPI, okay? So back in the 2000s, so in the 2000s, your home price inflation reached a peak of 9.3%. And then it takes about, to my opinion, about a year and a half or so for that to come out into the shelter component inflation index, okay, for the CPI. So if we count about a year and a half later, it's almost a year and a half later, from December of 2000, where your home price inflation reached 9.3, we see that the consumer price component for shelter increased up to 4.3, okay? So it went up to a 4.3% from where it was at 3.5. And that's what I want you to keep in context here, is that change. So it changed by about 0.8% in about a year and a half. And that would translate into a CPI change of about 0.2 to 0.3% per year. So it would push up that overall CPI rate 0.3% higher than what it would normally. Then we go to the famous housing bubble of the 2000s. So in 2005, about September of 2005, your home price inflation measured by Case and Shiller, increased to 14.5%. And then about a year and a half later, about early 2007, because this was 2005, in early 2007, your shelter component increased back up to 4.3. And where it was in September was 1.9. So it pushed it up sharply here. Then you had your home price inflation bounce back from the lulls in the 2008-2009 housing price crash. They started to increase, and they peaked in October of 2013 at 2.8, while your shelter component of the CPI was at 2.3. And then about a year and a half later, your shelter component raised up to 3%, and so that was about a 0.7% change. So what's going on now? Well, your shelter component of the Case-Shiller Home Price Index is at 14.6%, and that's as of the end of April. So the next data is going to come out around the end of July, and that'll give us May, but it's certainly going to push up higher. And your housing prices right now are just, your shelter component prices of the CPI are just at 2.1%. So it's very similar to what it was back in the mid-2000s, with the inflation rates about the same. So we're looking at this inflation rate, this shelter component, to start pushing up over 4%, okay? So that 4 points, whatever it bumps up to, is going to have a huge change in the CPI. It's going to push it up by almost 1% per year. Now, all of these numbers that I'm throwing at you from this chart here may sound confusing, but I've tableized it for you and then ran a regression analysis to try to predict what's going to be the effect on shelter price components of the CPI with the overall CPI effect here. So you can see where I've charted out each change in the past for the past 20 years and what that CPI effect was. So, this is recapping from what I have just covered. Now, based off of this analysis and then running a regression analysis based off the data table right here, it has a pretty good error rate. It doesn't tend to be very far off the point. If anything, more often than not, it tends to understate what the actual inflation will be more than it does overstate it. It only overstated it once, and it tends to understate it twice. So that tells me that I'm giving you kind of a conservative estimate, but I went ahead and estimated out what this CPI would be at the end of June, because we've already got the shelter component out for June year over year, and that shelter component's at 2.6%. So based off of the trending rising home price inflation, it looks like home prices are going to be going up to a 17% year over year when the June 21 numbers come out, and that's pointing to a total inflation jump up to 4.8% for shelter prices from where they are at 2.6 right now. And that would be that the change would be 2.2%. What does that mean? It means that if home prices peaked at the end of June, which they're not, but let's just pretend that they do. If they peaked at the end of June, then we're looking at an increase of the CPI year over year at 0.7% per year starting around December at the end of 2022, so December of 2022, because it takes about a year and a half for this change to manifest. And what that tells you is that the CPI is going to be elevated. The Fed's been trying to shoot for 2% inflation. Well, I hate to tell them, but 0.7% is already going to be eaten up in higher rental prices, higher homeowners equivalent rent, and that's driven by these higher home prices. Now, once again, the Fed is going to cite that there's a shortage of housing. There's this botched up housing inventory because there was a destruction in production because of the government shutdowns. Well, that's true enough, but who's been lowering the interest rates? Who's been driving up the demand for these houses, causing buyers to bid over the asking price for housing because of a huge swath of demand? That would be the Federal Reserve printing money. So at the end of the day, we can always chalk this off and say, well, this is COVID supply bottlenecks. But no matter what, the monetary inflation is exacerbating this. And this is going to be another component that's going to push up. Now, unlike the other 2/3 of the CPI, which is more volatile, especially with food and energy, this is probably your most stable inflation. Once it reaches this 4.8%, it's not going to drop anytime soon, okay? So when we went and peaked at 4.3% in February of 2007, it tapered off, but it tapered off very slowly. It tends to stay pretty stable, and that was only because of this housing bust, this huge housing bust in the mid-2000s. Usually, these inflation rates stay pretty stable, and what we're looking at here is we're looking at an increase of 0.7% at the minimum, if not more, in the coming years for the CPI. And again, that's just going to keep it elevated. So if the natural inflation rate were to drop down to 2%, well, I'm sorry, it's not really going to drop down to 2% anymore. It's going to be at 2.7. Or if the natural inflation rate dropped to 4, then it's not going to stay at 4. It's really going to be at about 4.7%. And again, that's only if the housing prices peaked in June. In reality, these housing prices are probably going to still escalate. And the more that they escalate is the more that they are going to push up that final change at whenever it peaks about a year and a half later. And then that's going to push up your shelter component change, and that's going to push up the CPI even further. So again, that's making the case even more that these CPI numbers are not going to be going back to normal anytime soon. Even if they taper off, these components are going to continuously push it up in the coming months and years, even if some of the other supply bottlenecks relieve themselves, such as what we've been seeing in the used cars and new vehicles component. So at best, these housing prices will offset those drops, but at worst, they will actually add to the CPI and push it up. Thank you guys for watching this vid. If you like my content, make sure you click like, make sure you subscribe, and make sure you hit that notification bell. And I'll continue to push content out like this. I'll probably produce another vid tomorrow, about the same time, so be on the lookout for that. Once again, I thank you guys for your time, and I will talk to you later.